Good day, everyone, and thank you for your time. Sort of just taking a step back, just as an introduction. In the last 2 years, Aeris has started a growth plan and has been implemented over the last 2 years. So 2 years ago, we had the Tritton Copper Mine producing around 20,000 tonnes of copper. In 2 years, basically, in July that year, we bought the Cracow Gold Mine from Evolution, and that was the start of the transformation of the business. We went from a $10 million market cap company to currently trading over $300 million. And in the last 3 weeks, we announced another acquisition, which is the acquisition of the Round Oak Minerals assets. And that's what I'll take you through and how that will impact the future of the business. So we've been talking for quite a while to Washington H. Soul Pattinson, an Australian private equity firm, on their assets. They own the Round Oak Minerals business, which has got a zinc copper mine in Western Australia, a copper mine in Queensland, and a copper zinc project in Victoria. Over the last 6 months, we managed to land on a price and a negotiated position. We buying that business for $234 million. In the last 3 weeks, just as the market went south, we raised $117 million in new equity for a cash payment of $80 million as part payment, and the rest would be equity issued to Washington H. Soul Pattinson. What we have managed to do is to buy these assets at 1.9 times EBITDA, which we believe is a very good price. They will also leave $17 million of cash in the business, plus working capital on top of that, and that will give Washington H. Soul Pattinson about a 30% equity position in Aeris. What it does bring in is 2 cash-generating assets, both generating significant cash, and it will set us up to bring the 3rd project into production, which will immediately transform Aeris from 2 operating mines to 4 operating mines on completion of this transaction, with a potential 5th operating mine on the completion of the project in Victoria. We've always said we want to grow this business. We always focus on growth. As I said, 2 years ago, we bought Cracow. That was the start of the transformation. And this is specifically 100% on strategy. We always said we want to go base metals, stay in base metals. That's what it does. It is a significant improvement from production. We go from 30-odd thousand tonnes copper equivalent production to 63, so it's nearly double production. It takes the EBITDA to over $308 million for forecast in FY23. So it's generating significant cash at operating level, which then allow us, and you'll see in the slides coming up, to invest in our 5 operating mines to actually grow them beyond where we are today. What it will remain, so we've always been a copper producer. We will remain a copper dominant producer at more than 60% in production. Both in reserves and resources will remain at that level. And we've always tried to maintain that focus. It is a good balance. With the gold in there from the Cracow mine, it's a good nearly hedge against copper because it sort of helps. And then zinc is a new acquisition coming in, and with the zinc price where it is, it's generating significant cash. So that's how it would look. We've got a corporate office in Brisbane. We've got the Cracow Gold Mine in Queensland producing 50 to 60,000 ounces of gold. We've got the Tritton Copper Mine doing 20 to 22,000 tonnes, and within the next 3 years, we'll hit 30,000 tonnes of copper. You'll see that coming up. And then the new acquisitions is the Northwest Queensland Operations, which is around the Mount Isa area, the Mount Colin mine doing about 12,000 tonnes of copper, and the Jaguar operation doing about 15 to 20,000 tonnes of copper equivalent out of the Jaguar mine. And then on top of that, you bring the Stockman project online, which will do about 30,000 tonnes copper equivalent when that starts. So you really look at a projection for the business where Tritton 6 months ago had 4 years mine life. We're now saying it's 8. We discovered a new deposit 18 months ago, the Constellation deposit. And with the Tritton mine, we're in the process of developing 2 new underground mines to get out of the low-grade underground mine at Tritton, which will see the projection of production up to 30,000 tonnes. Cracow we bought 2 years ago from Evolution. 2 years ago, we said there's 2 years of life. We think there's more. 2 years later, we're saying there's 4 years of life, and we think there's more. So through the exploration we've put in place in the last 2 years, we have discovered new deposits, new veins within the current field, and we're now putting our focus to the greenfields exploration going forward. The Jaguar mine, in November last year, when Washington Soul Patts looked at what they want to do with this, it had 2.5 years life. Since then, they discovered a turbo deposit, which is a new vein or new structure in the underground mine. Now we're saying it's got 4+ years, 5 years mine life, and we need to drill those deposits out. The Mount Colin mine is a firm 2 years life. It basically will taper out of the next 2 years. It does generate significant cash. The main aim for the Mount Colin district is how do we use that as a footprint into that northwest Queensland area, which we all know is highly prospective for copper in that region. And then we plan to bring the Stockman project online in the next 2 to 3 years, and as that come in, you end up with 2 long life assets in Tritton and Cracow and 3 operating mines, all with potential extensions as you keep on exploring on those assets. So on a combined basis, significantly increased resources by 200%, 400% on reserves, production 81% up for FY23. What we do like is the resource and reserve grades going from 1.4% to +2%. So the quality of the assets we're bringing in, once again, is a step up from where we were 12 months ago. And then on an EBITDA basis, forecast for FY23 sitting at around $300 million. So that then allows us to bring in these new mines at Tritton, fund the development of the Stockman deposit, and then leading into that, you see what that does to our peer group. We jump up on production. Within a few years, we should hit 80,000+ tons copper equivalents, so close to 29 metals. Our market cap go to +$500 million at the price we raised, and the reserve basis. The key takeaway for me is the bottom right-hand slide, which you can see after this deal done, we still only trade at the $500 million at 1.6 times EBITDA, where our peer group all trade above 4 and 5s. So for us, it's a journey. It's about bringing in these new businesses, taking on the synergies which it creates by size and from where we are, and then see how we work through the growth of the business to improve that multiple. Is a way we think it works. Just quickly through the assets we bought. So the Jaguar operation is in WA, as I said, well-known area with a lot of gold mines around. Now that they have found another deposit, we will put about $57 million in capital in this financial year coming to build a new tailings dam, improve the ventilation of the underground mine to allow us to keep going beyond 4 or 5 years. You'll see the production FY23 is a slight drop, but that's as we transition into starting up these new mines going forward. In northwest Queensland, I think the image of the map is really the key takeaway. You can see all those businesses, exploration guys, producers in that region having a footprint. We always said having a footprint in that region will allow you to create a business. We will put a business development manager in there to actually work through growing that business to extend the life beyond the 2 years. It generates significant cash, although it's not a lot of copper. Capital is spent. It's really just harvesting cash for basically for the next 2 years. Then the Stockman project, once that's in production, that will do more than 30,000 tons of copper equivalent. Significant grades at 4.7% copper equivalent grade. So the grades there, we have a mining lease already in place. We have a tailings lease in place, so we can use that. It's the mine approvals, and we're planning to take it to a DFS within this financial year and make an investment decision within the next 12 months. Just a very brief look at our current operations. So Tritton, as I said, 6 months ago, Tritton had 4 years life. With the discovery of the new deposit, you can see the production profile will go up to plus 30,000 tons of copper, and we see that continue then at those sort of levels for quite a while as we bring these assets online. And then the Cracow Gold Mine, 50 to 60,000 ounces. Exploration is key, and through that we will keep growing the business as we invest in Cracow. I guess the forward plan is really exploration, getting all these mines integrated the next 6 months, and actually build a significant business going forward. Thank you very much.